Welcome back to another episode of Not Financial Advice. My name is Sean. Today is Good Friday, March 29th, 2024. And today we're going to be doing an update on my portfolio, which has just hit a new milestone of $80,475. We're going to get started and go through each and every one of my holdings right after this.
You need to diversify your bonds.
The only problem you're going to have is that you didn't buy more. Because by the time you read about it in the Wall Street Journal, it's already too late.
All right, smash that like button, hit subscribe for me so we can just jump right in. Guys, I wanted to bring this video to you today. As you know, the market has really been on a tear for about the last 5 months, and I have come a long way in my investment portfolio. I think my first portfolio update was somewhere around $65,000. So, we've gained $15,000, $20,000 since you may have seen that first one. If this is your first time on my channel, what I'll say to you is this. Here at Not Financial Advice, you're able to see 100% of my investments, not only on red days, but also on green days as well. And just going back to November 21st of 2023, around 5 or 6 months ago, what I've done is I've recorded each share, each dividend reinvestment. I don't sell stocks, so that wouldn't be on here. But the portfolio is up about 27%, beating the S&P 500 over the last about 6 months. So pretty dramatic outperformance. And so only around $1,500 of this were new contributions. The vast majority of this is going to be capital appreciation. And so for the $80,475 portfolio, yesterday was Thursday. The market's closed today as it's Good Friday, like I said. So let's just do a quick recap on how the portfolio did yesterday. So yesterday, the S&P 500 was up 0.11%, but the Russell 2000 small cap index was up 0.48%. My portfolio was somewhere in the middle, up around 0.35%. So I made $278 yesterday. And that would track as we have the small cap index here, the large cap index here, but around half of my investments are those mid and small cap companies. So that's all kind of in line and what would be expected. But I guess, what I'll say is I show you this. Let's visualize what the portfolio looks like. I would say that I have a moderately diversified portfolio, although I do have some good concentration in about my first 15 names. And we're going to spend the majority of the time talking about my biggest 15 bets. But there are 74 different investments. And when it comes to that, about 35% of these investments are going to be either mutual funds or ETFs. And so you can see just right here, there's about 15% ETFs, around 20% mutual funds. So around 65% of my investments are individual stocks, but I do have around 35% in funds. And so as you can see here, the biggest position is Fidelity Mutual Fund. This is the equivalent of VTI or the total US stock market. Then my largest position in a single stock is Amazon, which makes up 8.5% of my portfolio. My next largest position is Coinbase. It's less than 4%. It's 3.6%. So that just sort of shows you at a glance, the level of diversification in the portfolio, 74 holdings. And what I would say is this: I have had some different influences in my investing journey. I would say in no particular order, it's Peter Lynch, Charlie Munger, and Warren Buffett. And so, when it comes to Buffett, that's the old Buffett buying, significantly undervalued companies, maybe not the best companies, what he learned from Graham. Obviously, with Munger, it's buying great companies at decent prices. And when it comes to Lynch, he has a little bit more diversification, but he really touts buy what you know. And so a lot of people on YouTube, have 8 or 10 or 12 position size holding in their portfolio that, they hold a very, very concentrated portfolio. Others just simply invest in the total US stock market and maybe a few sector ETFs. I'm somewhere in the middle. And so 74 investments, is that a little or is that a lot? Again, my top 15 are pretty concentrated. But I am more concentrated than the S&P 500, which is 500 stocks. So I would say this is a diversified, yet fairly concentrated portfolio that's now sitting at $80,475. So I have all-time gains of $12,600. That's about 18.6%. And so that's over the last 3 years. I started in the middle of 21, which was a bull market, and then for the longest period of time, all of 2022 and sort of the first part of 2023, we were kind of in a bear market situation. That was my longest period of time in the market. Definitely made acquisitions throughout that time, but then the second half of 23 and all of 24 has been a bull market. And so these returns come out to something like 6 or 7% a year, which is better than the average investor who makes something like 3 or so% a year. Um, it's unclear to me whether I'm pacing, beating, or underperforming the market. It's hard to tell because it's hard to see data that starts in the middle of a year. But overall, I think I'm doing well. And the objective, and I'll be able to track it at this point, is to beat the S&P 500 by year 5. If not, I'll just revert back to investing in more of a boglehead philosophy, total US stock market, total world stock market. And I'll just keep it simple and save myself the time and energy. But we've had some really significant outperformance over the last 6 months, I would say. And so let's dive in here and take a look at my top 15 holdings, and then we'll review the other ones and we'll keep it pushing. So, like the video, subscribe to the channel. Let's jump right in. So, what we can see here is that my single largest holding is, in fact, the total United States stock market. This is going to be a Fidelity mutual fund. And so this is a value of a little bit over $17,000. I'm up 22% on it, which is good for $3,100 in gains. And so I think my largest amount of gains are in my largest size position. So obviously that has a good feeling to it. Now, secondarily, Amazon is a company I see outperforming the market over the long run. So it is, in fact, my single largest position. I'd been underwater in it for a long time. All of these gains have just happened within the last month or so. But we have $6,800 of value there. I'm up around 9%, good for $550. Coinbase was a bet on Bitcoin becoming a new asset class and that very popular phrase, sell picks and shovels. Little did I know they would end up becoming the company that maintained custody of crypto coins for Fidelity and BlackRock's Bitcoin ETFs. And so this one has been absolutely nuts for me. I never thought I would be up 234% on a stock. So I'm up really big on it, over $2,000 in gains. And that actually brings me to a part of my portfolio investing philosophy. I'm not ever going to sell anything. I'm not ever going to sell anything, which is weird for some people. But the truth of the matter is, let your winners win. Don't water weeds and trim trees, as it were. And what I've found throughout time and with the concept of time diversification is that your winners will make up for your losers. And I'm seeing that not only in the total US stock market, but also in Coinbase, right? And then also in my fourth largest holding, Williams Sonoma, a company that sells French cast iron skillets to rich ladies, up over 120%, good for $1,500 in gains. And so while I see the gains in the total market and a company like Williams Sonoma as potentially being more stable than the gains in Coinbase, um, it's a good sign that some of my strongest performers, either by total dollar amount in gains or percentile, are within my top 5. So moving on to the fifth actual position is going to be Smith and Wesson. Now I'm down on this. This would be more of an old school Buffett play. It is cyclical. It's a hard company to understand if you don't have experience in this industry, which I happen to. But I've been down on this as much as 60% at one time, buying the dip. Great dividend growth on this. It's cyclical in multiple ways, including along election cycles. And so this is up a good 40, 50, 80% in the year to date or last year, moving in the right direction. I'm still down on it, but I feel very strong about this position. So you also have Winnebago. This is one that's interesting. I'm from Iowa. This originally was an Iowa-based company. This one I think could be looked at as a call option on upper middle class people buying discretionary items, or a call option on interest rates going lower, or a call option on, making sure to be able to benefit not only defensively, maybe like Smith and Wesson does, but to benefit when there's a bull market. Consumer discretionary is one of those growth sectors of the economy. So then again, we also have VBR, small cap value. So this is one that can perform under any climate. Historically, it's returned about 11.5% a year, but we are looking at interest rate cuts coming. This one will benefit not as much as small cap overall, but I like to own small companies that are profitable. So I have a really nice dollar amount of gains, which is $310, but also 16% here on my sixth or seventh or whatever eighth largest position. Now moving on, we have Netflix, which is a high conviction bet for me. I owned it before it made a massive drop. I owned it when Bill Ackman bought it. After Bill Ackman sold out of it, I bought more, continued to hold it, and I've let it run up to 80% gains, almost $1,000 worth of gains. Um, the thesis on this one is strong for me. It's that they have the best content, secular trend towards streaming, and they have content so good that it makes me cry. And, if you want a good cry or you want to kick back and enjoy, some entertainment, I think Netflix is bar none the best streaming service, and I'm super bullish and long on it. Going to Alphabet, which is coming in around my 10th or so biggest position. This one has not performed fantastically well, up about $290 or just under 18%. All of these I've held for, at least about 3 years, you guys. But the thesis on this company is really, for me, it's actually YouTube. So advertising is a big part of what they do. The cloud is a smaller part of what they do. But there are more eyeball watch hours on YouTube than Netflix, although they're two completely different types of streaming platforms. This is really just a play on ads. Um, and I also own the total market, so I think Microsoft can gain ground in search as well as in cloud over Google. But I see Google potentially being re-rated more as a core stock, or one that'll need to start paying a dividend. And then Visa. So this is a high conviction holding for me. The concept is independent of inflation. When people spend money, Visa gets a cut. So it's just a call option on the world having any form of economy. Very high margins, a really strong balance sheet, and they're a very profitable company in every way imaginable. Up 25% for $313 in gains. Cummins, this one is, not very in line with the total market as far as holdings go. So it's an industrial. I think they make the best diesel engine. I know there's this push towards EVs and hybrids, but I also know that, holding industrials can really benefit you when the market is hot. When different data centers and power facilities are going to be built to support AI and large language models, there's going to be a lot of diesel trucks that are going to need to be bought for this. If regulation constrains them in the United States, I don't think India, China, Russia, Brazil, India are going to stop using diesel anytime soon. And so, pretty strong feeling about this company, a nice dividend on it. Similar amount of gains, around $340, up about 31%. Now, Salesforce, this one's simple. At least 80% of Fortune 500 companies use Salesforce to track their sales leads. So it's a customer relationship management software system. I kind of look at it as buying Microsoft in the 1980s or 1990s. And so this is a software company with very high margins, third largest software company in the world. Really strong performance, up 55% or over $500 in gains. Now, Coca-Cola, FEMSA, this is Mexican Coke in a glass bottle. I stole it from Bill Gates, who probably stole the idea from Warren Buffett. And both Bill Gates and I have bought this at a similar Buffett valuation for traditional American Coke, symbol KO. And so a Mexican Coke in a glass bottle is just better. It's a sleeper stock. Not a lot of people look at it. I've got $1,430 of value in it, up nearly 60%, good for over $500 in gains. Now, rounding out the last two of my top 15, I'll ask you to like the video and subscribe to the channel. But what we have here is large cap growth. And so I've held this probably the longest of anyone that we're looking at here. But it's up a cool 37%, up nearly $400. And so I've been able to benefit from that NVIDIA trade by holding this. It's one that I rolled it over from my first workplace 401k, and I'm glad that I did so. This is probably from 2021, early 2021. So last but not least, we have Best Buy. This, I think, is a call option on a reaccelerating housing market. I think mom wants to go see washer and dryer machines before she buys them. I think that as AI becomes a bigger thing, desktops will become more and more of a thing. This is sort of a mid-cap value type company with some good top line growth, but it's run really well by a really smart CEO. I'm down on it. I don't think that's going to be forever. Down $105 on this position for about $1,300 in value. So now, with that being said, we've sort of given that elevator pitch, that short description. Lynch says if you can't explain to a fifth grader why you own a stock in a few sentences that would keep his attention, you shouldn't own it. And so I've done that with the top 15 that I have. What we're going to do now is we're going to go through the rest of my about 60 holdings, and we'll do that sort of one page at a time. And so I'm going to take us down here, and I'll start on Best Buy just so nothing is edited out. But I'm going to go ahead and take this cursor and just sort of trace along the area of the other positions I hold. There'll be about 3 pages of this, and I'm going to go just slow enough that you won't have to pause it. You can if you want to look at more detail on how much I have into it, how much I'm up or down, but let's just review some of the other holdings. So we have SCHD, True Leaf Cannabis, Intel, Apple, Vanguard Healthcare. We have Charles Schwab International Dividend. We have Vanguard Financials ETF. We have Vanguard Total US Stock Market, or Total International Stock Market, rather, VXUS. We have Spider, State Streets, XAR, Aerospace and Defense, Ulta Beauty, Turning Point Brands, Vertex Pharmaceuticals, Green Thumb Industries. It's remarkable that I'm up on that one. Vanguard Utilities, Kroger, Wheaton Precious Metal. Then we have Berkshire Hathaway. So now we're going to move to our next page so you can review the rest of my holdings. I'll ask you to like the video, subscribe to the channel, and let's start here where we left off. So we have Walgreens, Microsoft, Sam Adams, Boston Beer Company, Dollar General, Texas Roadhouse, Molson Coors, TAP, Meta, or Facebook, Tyson Foods, Target, Curaleaf, Home Depot, AutoZone, Church & Dwight, Tesla, Estee Lauder, Foot Locker, Costco. And we're going to go ahead and I think this should be the last page. So then we have Starbucks, Cintas, TJ Maxx, eBay, Airbnb, Domino's Pizza, Hills Bank Corporation, my local regional bank, Seneca Foods, Scott's Miracle Grow, Casey's. It's kind of like a Wawa, or it's like a Wawa, but here in the Midwest. Caterpillar, Waste Management, Service Corp International, a funeral home. Paramount, not feeling great about this one. We'll see how it goes. U-Haul, Vanguard Value Index Fund ETF, sort of a placeholder. McDonald's, Kraft Heinz, 3M, and then I think there's just a few more left. And then lastly, to round this out, we have Vanguard Energy ETF, Procter & Gamble, Coca-Cola, Pepsi, Johnson & Johnson, and then a small position in the ETF version of the total US stock market, VTI. And so this makes up all of my holdings. As we can see here, this is the trajectory of the fund. There have been about $2,000 in contributions, so I'm not sure. That's the smaller amount of how much this fund has gone up, but we can see since November 21st, this is up. My portfolio is up 27%. Folks, that wraps it up. Again, my name is Sean with Not Financial Advice. If this is your first time checking out my channel, I'd sure appreciate a subscription. Make sure to hit thumbs up on the way out, and I will see you on the next one.